Hey, what's up YouTube? My name's Casey. You're tuning in to howtoplaystock.com. In today's video, I am going to cover indexing and investing with index funds. And I'm going to take you in and I'm going to show you the performance year to date and for the long term on a strategy that I have going with specific index funds that are on the stock market. And we're going to go into Google Finance here, and I'm going to show you just how you can basically reduce your risk, all right, and turn the odds in your favor so that you're not losing as much money in the stock market, all right, especially when you have stock market dips, stock market crashes, and then on top of that, it's going to, when it turns the odds in your favor, you're going to start winning more, okay, because of the strategy that I'm going to show you here. And when you do lose, and the markets are performing not too well, you're not going to lose as much either, okay? Because I know a lot of people will invest in like one specific company, and it sounds great, and you may get better returns that way, but when the stock market crashes, you're also going to lose more. And I'm going to show you a way to avoid doing that, okay? So keep watching, and I'll see you in the next segment of this video. In today's video, I just wanted to briefly cover some of the strategies that I've been using for my long-term investment portfolio and building your wealth. This has a lot to do with risk parity and asymmetrical risk reward, and that deals with basically reducing your risk of losing. So what you're doing in theory here is you're turning the odds in your favor of beating the stock market, or at least getting some decent returns over the long term without having to worry about losing 50-60% of your wealth when the stock markets are uncertain, or you start experiencing massive stock dips or stock market crashes. Okay, so what you're looking at here is my portfolio of stocks that I've got basically that I'm looking at. Now, not all these stocks that I've got selected here are in my actual IRA account. It's only about half complete right now, but if I had all these stocks that I had purchased, and all of them were in my IRA account at the moment, it wouldn't be let's just put it this way, the performance on this would be pretty good, and I'll explain kind of here at a later time in another video what my IRA is doing as far as the asset allocation and the performance on it right now. We won't cover that in today's video, though, for the sake of keeping this video rather short. So what I've got here is, this is based on a $10,000 investment, and this just kind of shows the performance compared to the Dow Jones, S&P 500, and the NASDAQ. I'm in the blue right here. So if I would have had $10,000 for the year 2016 invested in my IRA account, and I had it set up just with these stocks here that you're seeing, and I had all of them in my IRA at the moment, this is what it would do as far as performance for a 3-month time frame. And you can see right here it's at 4.33%. Now, of course, it's beating the S&P 500 on the 3-month. It's beating the NASDAQ. So that's not too bad as far as returns. The Dow Jones, however, is up a little over about 3% on mine. That's for the 3-month. Here's where it starts getting interesting, though. We'll go to the 6-month. Again, I'm beating the S&P 500, and Dow Jones and the NASDAQ are up on mine, but mine's at around 7.57%. Now,
I want to let you know real quick that the funds that you're looking at up here, where my cursor is, these are all indexed funds, and an index fund basically acts kind of like a mutual fund. Um, you're owning broad markets or industry sectors when you invest this way. And again, it allows you to basically become the casino. Um, and you'll hear me in some of my previous videos talk about how the stock market is set up kind of like a casino. How folks will, when they go into the casino, and I'll ask you this question real quick: how many times have you went to the casino and you've lost money? you know, like that's happened quite a few times to me. And that phrase, "the house always wins." That's kind of the concept that I keep in mind when I'm investing in the stock market, because the stock market is real similar in a sense. So, getting back to the performance though, there's the 6 month, and then year to date, we're looking at 1.37%, and it's beating the Nasdaq. The Nasdaq's down negative. S&P 500 is only up 1.14%. Dow Jones is at about 3.18%. But you'll notice that even with these markets down quite a bit in returns, mine's not doing that bad. It's still not doing that bad. So we'll go to a 1 year. Now there's 1 year for you. Now, based on $10,000 investment, just look at the returns here. Mine's at 43%. There's the Dow Jones at 15, S&P 500 at 11, and the Nasdaq at 9%. So based on $10,000 investment for 1 year returns, I don't know about you, but I could definitely settle for a 43% return. I mean, look at that. That's absolutely crushing the Dow Jones, S&P 500, and Nasdaq, just based off the performance of all these, totaled together. Let's see here. There's a 5 year. You're still up 43% here. So, as you can see, asset allocation and diversification and investing with indexing funds, becoming the market, owning the market, and setting yourself up for a strategy that allows you to become the casino will put the odds in your favor so that you can grow wealth over a long period of time. And as you're seeing here in my example with the, based off a $10,000 investment on performance, you're not going to do too bad when it comes to your returns, long term and even short term. And if the markets start losing, as I showed you here, or if they're not doing too well as far as performance, you're not going to lag too far behind them. Whereas, if you're investing in like an individual company or something like that, chances are, that company could take a 20% drop, and just because the markets aren't performing very well. So this is a way for you to reduce your risk and turn the odds in your favor so that you're winning more often when you're investing in the stock market. Okay, I just wanted to show you guys that today because we're going into the new year here, and who knows what's going to happen as far as the fundamentals and events that might take place on a global scale with the international markets. Nobody really knows. You can't predict the markets, and you can't time them for the long term. Okay, so with that in mind, it's important to set yourself up so that you're reducing your risk, and this is a great way to do it. And the performance that you're seeing on a $10,000 investment, I mean, it shows you right here. Here's proof that doing it this way is definitely going to set you up for better returns and help you preserve your money over a long period of time. Because that's what we're focusing on here, is the long term. So, with that in mind, Happy New Year, guys. Hope you're having a good day. And, remember, income's the outcome, okay? Till next time, I will talk to you guys later.